Hey everybody, welcome back to another market update with the team from tradingandinvesting4u.com. Once again, before we get started, please remember this is general advice only. We are not making any buy recommendations or anything like this here. We did not take the need of the investor into account when we made this, so please remember everything is just general advice only. Now, let's have a look at this. Today, I want to have a look at the Federal Reserve and what they've been up to recently. I also want to have a look at Apple's earnings because what happened last night was way out of whack with the expectations of analysts. So, before we get started, once again, please remember if you're watching this on YouTube, we have a series of links there we think can really help you out. Please take advantage of them. And remember our blog, where we're going to have an in-depth article about what I'm about to go into right now. Remember, when you get to our blog post, you'll see our blog there. And very importantly, take advantage of that free training video on the right-hand side. You get a 3-step simple system to finding amazing entry points while trading from our professional trader, John Howe. Very important. Please take a look at that. Now, let's get into this. Federal Reserve and Apple. Firstly, what happened with stocks last night? Once again, they went down. No big surprise. I think the S&P, the Dow, the Nasdaq, they all finished down probably between 0.8 and 0.95%, so everything, just under 1% losses last night. Spanish stock market absolutely clobbered again, 3.58% down. A lot of other, actually nearly everything in Europe went down again last night. And I don't think there's any secret why. I touched on this a lot yesterday, so I won't talk about it a lot now, but it seems quite clear that Greece cannot repay what is owed. And that means, I guess, one of two things are going to happen. Number one, there's going to have to be some kind of debt restructuring by the creditors. The creditors are going to lose a lot of the cash, I guess, that's owed by Greece. So they're either going to have to restructure and rejig the terms and conditions to give Greece a bit more breathing room, or, I don't know, we might see Greece being shoved out of the Union. Either way, we're going to have to wait a few days to see what happens there. Spain, well, the cost of borrowing did go down a little bit. It's still very much unsustainable, and the problems are still ongoing there. So we'll have to see whether or not they're going to get this sovereign bailout as well. Anyway, let's go into it a bit more. Federal Reserve, what have they been doing recently? Well, Operation Twist. Now, I've spoken about this before. This is what the Fed's been doing for quite some time now, I guess. And this is their way of trying to stimulate the economy. Basically, what they've done recently is bought $1.81 billion worth of treasuries, and this is in what they call a swap. So these treasuries are due to be paid back, I guess, between February 2036 and May 2042. So what the Fed's basically doing is they're doing a bit of a swap. They hold short-term treasuries that are due to be paid back earlier. They swap them for long-term treasuries. And they do this to try and push interest rates lower and therefore stimulate the economy. After all, corporates and the average Joe Blow on the street can easily afford to pay back debt borrowed at lower interest rates, rather than higher. That's pretty obvious, right? Pretty debatable, I think, whether or not this has worked so far, but this is still what the Fed continues to do. Interestingly, it looks like they're going to have another series of meetings next week to decide whether or not they're going to have a new round of stimulus spending. Let's see what happens. They've been talking about it for a while. Maybe they've figured out that things are just going south too quickly and they need to step in. But essentially, if we look at what's happened over the last few years, please remember, traders, that every time the Fed comes out and starts stimulus spending, equities go up. So, please keep an eye out for what they're going to do next week, because if they come out and say we're going to start spending more money, then we're likely to see a rise in equities from the time they start the spending to the time they end the spending. So very important. Please keep an eye out for that. Now, I also want to bring to your attention Treasury yields, and basically what I'm talking about are government bond investments. So the investors that buy government bonds, primarily U.S. bonds, they've been flocking, and they've just been buying tons and tons of these U.S. treasuries. In fact, I think yesterday, $35 billion worth was sold for 2-year bond notes. There's been another $35 billion due to go on sale tonight, and they're just being sold so quickly. And they're being sold at record low interest rates. So, for example, the yield for a 10-year note is now 1.3875%. 30-year yield is 2.453%. So this means basically, guys, that investors who are buying this government debt to be paid back, they're only going to be getting 1.38% for a 10-year investment, or 2.5% for a 30-year investment. Now, I'm a little bit confused here, but for me, that doesn't sound like a very good deal. So if you guys have any comments or ideas about why guys are still flocking, and I mean flocking, to buy these US Treasury notes, please leave a comment below, because I'm kind of stifled. I think there are a lot better investments out there than this. For me, the US is so deeply in debt. I can't imagine how they're going to pay back these yields. But investors are clearly very trusting of the U.S. government and their ability to pay these debts back, and they're also quite happy to do it for next to no return on their capital. So I'm surprised, but record lows for these yields are ongoing, and people are still lining up to buy them. So yeah. Anyway, guys, if you have any comments about why that's going on, please leave them below. Let's move on again. What I want to do now is have a look at Apple. Now, after hours, Apple's price lost 5%. They had a pretty bad earnings report, for Apple anyway. And this is the first time in 39 quarters that Apple has reported results that missed analyst expectations or predictions. And Apple have blamed these results on two things. First of all, anticipation of their upcoming iPhone 5 release later this year. They're basically saying that consumers are not buying phones anymore. They're kind of waiting to upgrade to the new iPhone 5, and this has heavily impacted their sales. Yeah, maybe. They're also grudgingly saying, yeah, okay, the global economy is hitting us a little bit. Interestingly, they're saying that Asia is not impacting them, even though China demand has dropped a lot. They're basically pointing the finger at Europe and saying, well, obviously, look at Europe, they're struggling, and our sales over there are struggling, so that's another big reason why we've lost quite a bit of cash. Not lost cash, but had a lower earnings report anyway. Yeah, I don't know. I mean, I reported yesterday on McDonald's and their big loss. I think big companies like McDonald's and Apple are very good indicators of how the global economy is actually going, because they're very big brand names and they're usually pretty resilient, right, to economic downturns and upheaval. But when they start having bad earnings reports, and when they're actually losing money, I think it's a pretty good indicator that the resistance to these big brands to global economic pressures is actually starting to decline. And I think it shows, or it's at least one indicator of just how bad things are potentially going to get. Now, I might be totally wrong here, and obviously in the third or fourth quarter, maybe the iPhone 5 will come out and bang, everybody's just going to go buy it up and Apple will go through the roof again. It's definitely going to have a spike because everybody loves the iPhone, but I don't know, will it be enough to I guess, counteract the effects of the global economic pressures? We'll have to wait and see. I have my doubts, but we'll wait and see. So, I guess the next week or so, guys, we need to look out and see what's going to happen with the Federal Reserve. If they start printing again, bang, I think we'll likely see a rise in global equities. And we have to wait and see what's going to happen with Greece, because we're in a very, very dodgy time right now. And if they do get kicked out, if the creditors say that's it, enough's enough, it's going to be very interesting to see what's going to happen there. Anyway, thank you very much for listening today, guys. If you have any comments, obviously leave them below. I'm very interested to hear what you guys think about what's going on in the world as well. Otherwise, please remember, once again, if you're watching this on YouTube, take a look at some of our free education, guys. We've got a lot to offer. We're really trying to help people out in these tough times at the moment. Take a look at our blog, and hopefully I'll have a chance to talk to you again tomorrow.